Hi everyone, welcome to season 4 of the Science Hat podcast. My name is Melissa Benson, I'll be your host, and I'll be joined by Dr. Alan Taylor, the Executive Chair of Clarity Pharmaceuticals. Welcome, Alan.
Hey Mel, great to be back. Lovely to be here.
So we're going to kick off in a very exciting space, the market, the madness of the market. It's been a wild time, I guess, for radiopharma, but especially in the US. So with the new administration, we've got tariffs, we've got FDA personnel cuts, we've had some trial releases on the Aussie market. And I think first I want to focus on the US. The US is the focus for Clarity. It's the focus market. You know, when we think about tariffs, when we think about FDA funding cuts, you hear about potential Medicare cuts. What is all of that? And obviously the point being it has a big impact on share price. We've seen the biotech sector broadly being sold off along with many other sectors. But I guess interested to understand your digestion of that and the impact for Clarity as a business.
Yeah, it's a crazy time. And we've been through these times before, but this one is a little bit different.
It feels different.
It feels different than the GFC. It feels different to COVID, where everyone was working together to really work our way through that. And look, we were doing a $25 million capital raise in April 2020 in the midst of COVID lockdown and still were successful in delivering that. This time it's different because it's a little bit more self-induced. Now, when you build a life sciences company, and I take full responsibility of this, of when you start out and you want to create something like we have, it's based on certain assumptions that the US has to be your center of the world, like you just said, and it has to have a stable democracy. It has to have, it is the largest financial markets in the world, so that has to be stable as well. And you have to have a regulatory environment which is somewhat predictable. And if that remains true, because as of today, at the moment, we're kicking off trade wars and, as you said, changes at the FDA and Robert Kennedy, taking over that position. But if our hypothesis remains true, we're in a fantastic position.
Yep.
Now, that has to sort itself out. And today, this is where you have confidence in the market, where it starts to pull back, because maybe not everyone has the confidence that there's a stable democracy, that the financial markets are intact, given they're falling 5-6% a day. And the reg environment, since there's such large changes. Now, we haven't seen any changes in our correspondence with the FDA, and you've seen some of the things we've received recently with the fast track designations.
Yep.
We haven't had any changes in that correspondence, interaction, or anything at this point in time. But when you have some significant people leaving, then it becomes a problem. Now, if I take it from the lens of us, in October last year, that economy was humming.
Yeah.
It was amazing. It was an amazing period of time. The economy itself was up, unemployment was low. They had a little bit of a problem with inflation. It was a little bit stickier than they thought. And it was a great environment. And then we hit November, and this corresponds even with our share price. We hit November, and I was over there actually in the US for the election with a group called Centerview Partners, which is the major M&A advisory group in pharma and biotech. Right? As a invited guest, it was great to be there, but that election was the first day. And then immediately we had the Robert Kennedy situation of moving into the FDA. And that's when we saw probably really the canary in the coal mine. You start to see the XBI fell 10% nearly on that first moment, and they bounced back a little bit until they started to sort out what was going on. But that XBI is now down 30%.
Yeah, it's been continuous since that period. Right?
It is. And then so when you look at that for biotech, whether it's and pre-revenue biotech, whether it's in Australia or in the US, all of them have been significantly affected. And then over that time, we've moved into the ASX 200 correction. Now we're in a state of play where there's just a whitewash of waters that, different groups find themselves in. Now for us, fortunately, We're incredibly well financed, right? When we're looking at over $100 million. Our programs, our products have been substantiated in phase 2 clinical trials, now moving to phase 3.
Yep.
We have absolute confidence in particularly SAR-BIS PSMA as an absolute blockbuster.
Yep.
Okay. And so when I look at our history, even from listing, you may recall post-IPO, right, in August 2021, interest rates started to go up. Our share price got smashed.
Yeah.
$1.40 down to sub 40 cents. Now, the people who bought at the late 30s, 40s, 50s, 60 cents thrived.
Yeah.
Right. And it's unique periods of time that those situations
provides
open up.
Opportunities, right? Yeah.
And so as long as we have a situation where Donald Trump is reasonable, he thinks about the US because we are US centric, and he thinks about the people of the US, right? And I mean the people on the ground, the people, as well as people, the areas of significance for us are people in hospitals doing our clinical trials, people at the FDA, people who work in that process of developing new drugs. As long as that's all sound, we're in a great spot as a company. And there lies really the opportunity.
So layering on top of that, more recently, we also had, an ASX biotech peer in Opthea, very different market, different indication, but they obviously had a phase 3 program that missed its primary endpoint, a fail. And we have these time to time, absolutely, with biotech on the ASX. And I think, that always shocks the market a little and people remember, the risk profile. I guess just any comments you have around, not all phase 3s are equal. Not all the risk profiles as you head into those look the same. So I guess any comment you would have about the impact that may have.
Yeah, since we were written up in the AFR, it seemed like all week when that failed. We have no connection with Opthea as a company. Yep. In saying that, Megan Baldwin's been a driver of that, and there should be more people driving these sorts of opportunities in Australia. I don't want to speak negatively about the situation. Sometimes phase 3s fail.
Exactly.
But they're in a completely different market.
Yep.
Macular degeneration is not something we're in. We're in oncology. We've substantiated, as I said, our products in a number of clinical trials now. We're not a one-trick pony. As they were. So it was a very binary outcome. You either win or you lose. But because we shared a couple of shareholders in Regal and Pengana, suddenly our stock price went down 30%.
Yeah.
Now, that's happened nonstop. We've had this situation nonstop where if we've been brought into the mix, even though it's got nothing to do with our company, our stock will fall.
Yeah.
And it's just the market for that. It's just what's happened. But look, I very close to, obviously Regal, have some shares in us, very close to Phil and his team. Very fond of, obviously Gretel and Jeff, and Pengana. I was on the phone to James shortly after that. But because those situations happen, then we found that, and I heard through rumors that then suddenly people are shorting their portfolios.
Yeah.
And suddenly then we have more shorts.
Yeah.
Nothing to do with us.
There's no rational connection.
No connection otherwise outside of being a very investable company when they're investing and them taking up the last capital raise. Now, we've only done in the public markets 2 capital raises. We did our IPO of 92 million.
Yep.
And we did our capital raising a year ago of $120 million, just over. And that's it. We've only ever raised $250 million Aussie, and we still have over $100 million.
Yeah.
So we're very, when it comes to spend, focus, and all those sorts of things, we're in phase 3 clinical trials with a very small amount of money, really, speaking about how we are globally positioned. We feel very good at where we are in that. Not related to, we haven't got any Opthea structures in play.
No, that's another overlay that is absent, I think, almost everyone else in the market.
It's all funded by equity to date, very vanilla equity. We don't have any debt on our balance sheet at all. And that's ever been since the beginning. We've never had convertible notes, no funny structures. Everything is ordinary shares. All of their shareholders rank equally.
Yep.
And we don't have any subordination to any other structures that relate to phase 3 clinical trial outcomes.
So I guess we could probably summarize by saying, look, share price has been hammered, but unfairly, akin to so many other of your peers, but there's no real direct impacts of what you've seen thus far on structurally, regulatory, the market that impact your ability to move forward day to day.
Post the IPO, we had over $100 million in the bank, right? But we only had our products first in human.
Yeah, correct.
Now we're 3.5 years on from that. Our share price is almost the same at this point in time.
Yeah.
We have over $100 million in the bank, but now we have all of these.
Phase 3 and yeah.
We've got Secure, we've got, SAR-BIS PSMA on the diagnostic side, we've got SAR tape, we've got all these programs, right? And it's going to take focus, but they're blockbuster potential, even the diagnostic within a couple of years. And we certainly know where we're shaping up there.